Hey everybody, welcome back to Not Financial Advice. It's Monday, January 27th, and on today's episode, AI hype stocks are crashing big time. So we're going to talk about that today, looking at Nvidia down 17%, Broadcom down 19%, Vistra, a utility that's benefited from the AI hype train, down 28%, and Bitcoin down nearly 8% from all-time highs. We're going to talk about what to do when AI hype stocks crash and how you can consistently beat the market by buying the top 1% of stocks right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
Well, all right, everybody. If you hadn't seen the news over the weekend, it broke that there's a company in AI called DeepMind from China, which most of us had never heard of before today or yesterday. Essentially, the previous administration had some lackluster export controls, and through basically loopholes, China got their hands on some very powerful chips. So we're going to be talking about that today. I'll ask you to like the video, subscribe to the channel as we dive into it. So, the whole context of this is that AI and ChatGPT, Anthropic, other things, energy, utilities, even Bitcoin, that there's sort of this wave behind these hype stocks for 2024 and 2025. And what we're seeing is that a lot of these stocks, as they got bid up higher and higher and higher in ways that were kind of detached from the reality of their cash flows, we saw unlimited profit for these companies in the future. And so now we're looking back at what's the profit actually available to shareholders today. And we can see Nvidia in its own individual bear market as of now, down about 21% from all-time highs. Same thing probably with Broadcom and the rest of these stocks. I mean, we don't even really need to get into the nitty gritty, but yeah, AI hype stocks are now in a bear market. So how do we have higher upside and higher downsides during this time of market upheaval? So taking a look at my portfolio, looking pretty healthy today, sitting at about 97,500. And what we can see here is that I'm down about 0.4%. Well, the S&P 500 is down 1.9. You do see the Dow Jones, a more value-orientated indices, up 0.25%, but you see NASDAQ down 3.4% versus my relative outperformance. I'm down, maybe only 10% is bad. Yet I own a lot of these strong technology stocks. And so I view these not necessarily as value stocks, but I'm looking at them as blue chip companies, and that's what we own. So let's go through what stocks are doing well today for me. So I've recently concentrated quite a bit. The portfolio is down to only 38 names or tickers, rather. 24 of them are individual stocks. The rest are indexes or ETFs. So today I own Salesforce, which is up 4.5%. And so if AI is going to become a commodity, you're going to need software that is differentiated in that way. And so Salesforce with their new agent force is very much differentiated versus DeepMind, which the immediate impact being that consumers can go on there and ask it all sorts of complex questions or for recipes out of your fridge or your pantry. So we see Salesforce up 4.5%. Apple. So this is very interesting. When we looked at Nvidia going up and up and up and things being divorced from their fundamentals, currently, this is why I completely sold out of Tesla. Let's take a second and see how Tesla is doing right now. I'm going to ask you to like the video, subscribe to the channel, and let's join in together and look at this. Okay, so not so bad, but down 3% today, more in line sort of with the triple Qs, with the NASDAQ. So down 17.7% from all-time highs, with that trajectory looking like it might enter its own individual bear market. And so coming back here to my portfolio, when you see stocks that go up and up and up, be it Tesla or Nvidia, and you see, good free cash flow and good earnings, but that being priced in 20 years into the future, the question becomes, what cash flows are available today? What do businesses that have cash flows, how do they benefit you? Well, they can buy back shares, increasing your stake in the company. They can pay you dividends because they have steady current cash flow. And what we see today is kind of a risk off trade in the market. So anything that's associated with risk seems to be lower, and value stocks, or even non cyclical stocks are being benefited. And so this has never really lasted in the last 5, 10, 15 years. It is growth stocks that have advanced the market forward. But what's very interesting is, we're kind of looking at this. Think of it like a bond. If you have a bond with a 2 year versus a 30-year, the question is, what is the current yield and what's the duration risk? And so what's very interesting, Apple has not been growing their top line over the last, 2.5 years, or their free cash flow. It's holding steady. So those profits are available today. Apple turning into a risk off or even a consumer defensive esque stock, which is very interesting. One of the reasons I didn't sell, I knew that the short term or medium term impact didn't look good, but I had an instinct to not sell Apple, and that's being a ballast for my portfolio today. But you're seeing Home Depot, a company that could be benefited by lower interest rates and a boom to the housing market today, or in the future. But today, people who have money are still renovating their house, et cetera, up 2.3. Up 2.1 is Costco, very high at these levels as far as the valuation, but available with cash flow today. Cintas. So this is what I've been doing, and this is where we'll start to wind the video down. Instead of, looking at these hype stocks and getting into them, I've always, sort of thought, don't buy gold, buy the companies that sell picks and shovels. And so Cintas, they offer uniforms, and safety equipment for workplaces. And the thought is, if we're going to have a new industrial revolution in AI, data centers being built out, et cetera, different warehouses or facilities that have a lot of server racks, that Cintas also offers, sort of clean room and things of that nature. So I wanted to have that industrial exposure. And, if any part of the economy or the market grows, that'll benefit Cintas. And so interestingly, they're up today, even though I bought this as a NVIDIA, Bitcoin, hype stock exposure. I wanted to have exposure, but in a smart way. And I think this number's wrong. I think there's a stock split, and I own like 2 or 3 times more than that. But you also can see Vanguard Healthcare up, defensive, non-cyclical. You have sort of a cyclical but defensive name here. Waste Management up 1.8 in honor of today's dumpster fire. TJ Maxx. Moms are always going to buy socks and underwear and basketball shorts for their kids for school photos. I like to invest in things like that. Berkshire up, Visa up. Visa has this exposure to crypto. And, I actually recently trimmed about a third of my Bitcoin position, not Bitcoin, rather Coinbase. I took all of my money, all of my principal out of Coinbase. Now I'm just playing with the house's money. And I redistributed some of those funds into this portfolio, which is strongly outperforming today. But AutoZone, my defensive ballast, even in a tech-oriented portfolio, I have international dividend stocks, U.S. dividend stocks, so on and so forth. Some mid-cap growth names like Casey's, Uber is up, and financials are up. So looking at some of the stocks that are down today, I'm going to have you like the video, subscribe to the channel. Let's see what's really getting hit. Oh, Coinbase down 11%. That's great because none of that's my money. I already took my money out of it. But risk off means cannabis stocks are off. Here's something I wanted to do. And, people talk about leverage, 2x leverage. I don't want to have 2x leverage. I want to have 0.1% leverage or exposure. So looking at that hype train, what if I'm wrong? I want to have that participation in the upside. So Caterpillar needed to build out data centers, but also other ways, other paths to success. So I'm down there today with the future of AI looking cheaper for companies to grow. And so maybe less capital expenditure than was promised. Google down, large cap growth down. I actually got out of this and rotated into the total international market, seeing other markets in the world hit all-time highs, places in Europe and even China doing good. And so that was a prescient thing to do there. So VPU utilities, these companies, these data centers would need a lot of energy, not only energy, but also support from utilities. And so that has Vistra in it, which is a utility that's been up, like 300%. I wanted that 0.1x leverage. And so I've bought a lot of utility stocks. Traditionally, these perform opposite to the market, but today they're in correlation as the market. And AI hype stocks are synonymous with each other. So I'm okay to be down on that a little bit today. But cybersecurity down, so on and so forth, Microsoft down. And so, with Amazon, my largest position, now that's only down 0.4%. Like I said, I want to have multiple ways for my portfolio to win, to outperform, and things are looking pretty good here. So as we go to the all-time view, one small note on this. Google Finance is not accurately tracking shares of Meta, so I've swapped that out with VOX, communication sector ETF, which has a 0.91% correlation. But I actually would be relatively outperforming much better today because for whatever reason, Meta is doing okay. They can make money off things other than AI. But I have this high exposure, and Salesforce is really popping off for me. Let's look at total gain and then sort by value. So even though I'm heavily into the total market, heavily into Amazon, I'm also in small cap value, consumer discretionary, sort of mid cap value here. Williams Sonoma, that's actually become the number one stock in MDY, in the mid cap index, and I just own a lot of it, so that's great for me. But I've got value stocks here, dividend stocks here, high with Netflix and Salesforce and Google and Visa. But as you'll see here, you're not seeing NVIDIA, you're not seeing Vistra, you're not seeing crypto or Broadcom, although I do have that exposure. When these stocks inevitably rebound, be it in a month, a week, or in 10 years, I do believe in the promise of AI and what that's going to, the benefits it's going to have for the future of our country. But it's kind of not a linear path. It's not all or nothing. It's not black or white. And sometimes you have to have that second and third order of thinking. Sometimes that first level of thinking, which is AI is the future, so buy NVIDIA. Sometimes that works. Other times, I'm going to try and be a little bit cute about it, and that can benefit me. And then other times, it'll not do as well for me. But overall, very satisfied with the portfolio. What we'll do is we wind up this video. Let's look year to date and check out my performance versus the S&P 500. I kind of matched or beat the market last year and restructured the portfolio looking to do the same this year as well. And so this year the market's up after today's huge sink about 2% on the year. This isn't tracking perfectly, so I'm probably up about 4.5%, but I'm more than 2xing the market here with January in the books nearly. So stay tuned to Not Financial Advice, and I'll see you on the next one.